Your credit card statement is a document designed by a team of people whose job is to make sure you don't fully understand it. And I don't say that to be dramatic. I say it because once you know what to look for, you'll never read it the same way again. If you're trying to build stability for your family without burning out, you are in the right place. I'm Catherine, and I created the Secure First Money Method, a 5-stage framework for doing money in the right order. Today, we are in stage 3, strengthen. And specifically, we're cutting through the confusion your credit card company built on purpose. Here's something I want you to know before we get into the credit card statement. The confusion you feel when you look at your credit card bill is not because you're bad at math or bad with money. It's because the statement was designed to be confusing. Financial complexity is manufactured, and it's very profitable. The more unclear the statement, the more likely you are to miss something that costs you money. So we are going to walk through a credit card statement section by section, and I am going to show you what they want you to look past. Stay aware because there's a lot of systems in place that's eating up your money. Before we get into the statement itself, I want to name something. When was the last time you actually opened your credit card statement? Not your app, your statement, the full document. For most of us, the honest answer is months ago or never. And here's why that happened. Paperless billing. About 15 years ago, card issuers started pushing customers to go paperless. Better for the environment, less clutter, totally convenient. And all of that is true, but there's another reason they pushed it. A paper statement arriving in your mailbox is a physical reminder that your bill exists. It sits on your counter, you have to deal with it. A paperless notification gets buried in your inbox between a promotional email and a newsletter you forgot you subscribed to. Going paperless didn't make the statement less important. It just made it easier to ignore. And when you're not looking at the full statement, you're only seeing what the app wants you to see, which, as we're also about to get into, is not the same thing. So for this video, I want you to actually pull up your most recent statement, not the app. Most credit card issuers keep 12 to 24 months of PDF statements in your online account. Find the most recent one. We're going to go through it together. Section 1, the new balance versus the minimum payment due. These two numbers appear right next to each other at the top of your statement. They are not equivalent options. Your new balance is what you owe, and your minimum payment is the smallest amount the company will accept before charging you a late fee. It is not a repayment plan. Right below those numbers, there is a legally required disclosure from the Card Act of 2009 that made this mandatory. It tells you how long it will take to pay off your current balance if you only make minimum payments and how much interest you'll pay. Most people never read this. Today, I am wholeheartedly encouraging you to take a look at your statement and understand what it says. Section 2 is the interest charge calculation and where they hide the method. Now, your statement shows you an interest charge for the month. What it doesn't show you is how that charge was calculated. For that, you have to go to the fine print. It's usually buried in the last page or two of your statement under a heading like how we calculate your balance or interest charge calculation. It's written in dense legal language and it's not designed to be understood quickly. What it's describing is something called the average daily balance method. Here's what that actually means in plain language. Your card issuer calculates your balance at the end of every single day of the billing cycle. It adds all of those daily balances together and divides by the number of days in the cycle. That average is what they charge interest on. And here's the part that catches people off guard. If you're carrying a balance, New purchases start accruing interest from the day you make them, not from the statement close date. Your grace period is gone the moment you carry a balance forward. So that purchase you made last Tuesday, it's actually already accruing interest. The fine print doesn't tell you this, and most people will never find it. I have a full video that walks through exactly how credit card interest is calculated. I show you the math, the daily rate, and a sample Excel that you can use, and it actually tells you what it costs when you keep adding to a balance you're already carrying. It's one of the most important videos on this channel if you have any credit card debt right now. I'll link it in the description and at the end of this video so you can find it easily. Section 3, the grace period and when it disappears. Your grace period is the window between your statement closing date and your payment due date, usually 21 to 25 days, during which you can pay your full balance and pay zero interest. But here's what the statement doesn't highlight. The grace period only applies if you paid your previous statement in full. If you carried a balance from last month, you are paying interest on new purchases from the day you make them, not from the statement close date. The grace period is gone, and there's no big warning in your statement telling you this. Section 4 is the promotional rate expiration. If you have a balance transfer or a purchase with a promotional 0% APR, your statement will show that rate. What it will not do is prominently remind you when that rate expires. The day that promo rate ends, any remaining balance gets hit with the regular APR, often 20% or higher. And in some cases, if you didn't pay the full original amount, the interest can be calculated retroactively on the original balance. This is called deferred interest, and it is one of the most expensive surprises in consumer finance. Section 5, the rewards summary and what it's really doing. Now, many statements also begin with the rewards summary. Your points, your cash back, your miles. This section is placed above because it's designed to keep you with a good feeling. You're using your card, maybe paid some interest, and then you see you earned 847 points this month. It signals that you are doing right with your credit card, earning something, even though it's probably costing you more in the end. Of course, they don't show you the dollar for dollar exchange of your spending against your rewards, but the idea that you are getting something is very enticing. Now, don't get me wrong, I am not anti-rewards, but I want you to notice the architecture of that decision. The statement highlights rewards, not on how much interest you paid, not on how many months remain, our reward. And I want you to sit down carefully to see if that reward is worth it. If you are paying over 20% on your credit card balance and you're getting 2% interest, that math will never add up. If you found this video helpful, don't forget to like it and share it and subscribe to Sisters for Financial Independence for more money lessons. Now let's talk about the app, because I know that's where most of you actually look at your credit card. And the app is genuinely useful, but it is not the same as your statement. They show you different things, and knowing the difference matters. Here's the side by side. What the app typically shows you: your current balance, what you owe, including pending transactions, your minimum payment due and due date, your recent transactions, usually 30 to 60 days and searchable, and your available credit, what you have left to spend, as well as your rewards balance, usually prominently displayed, and of course, alerts and notifications you've set up. And here's a list of what the statement shows you that the app doesn't surface clearly. One is the interest charge calculation, the full method, buried in the fine print, the minimum payment warning, and how long it takes to pay off at minimum payments and the total interest cost, your statement closing date, and the exact billing cycle, any promotional rate expiration dates, deferred interest terms if applicable. And lastly, the billing statement shows you the full transaction history for that exact billing period, all in one document. Here's how I want you to think about it. The app is for weekly check-ins. You're looking at your running balance, you're flagging anything that doesn't look right, you're staying aware. The statement is for your monthly review. You're reading the whole document, you're finding the numbers the app doesn't show you, and you're making decisions with complete information. Neither one replaces the other, but if you've been relying only on the app, you've been making decisions without half the information your credit card company actually has on you. So you want to be looking at both so you are informed and making the right decisions. Here's your action plan. First is your statement. Pull up the most recent PDF. It's normally under account, under statements or documents, and you are going to find these 5 things. 1, look for your new balance versus your minimum payment, and make sure you look for the box that has the minimum payment warning box. Number 2, look for the interest charge calculation section. This is normally in the fine print. Read what method they use. Number 3, what is the APR of your card? Know the exact number. And number 4, your grace period status. Did you carry a balance last month? And lastly, any promotional rate and the exact expiration date for that promo. Then you are going to focus on your app. Set it up to work for you instead of against you. Number 1, you are going to turn on balance notifications. Set an alert when your balance hits a threshold that you choose. Number 2, check your running balance at least once a week, not just when your payment is due. Number 3, review transactions every week for anything unrecognized. Number 4, find where your app shows you your statement closing date. That's the date that resets your billing cycle. So, statement once a month, app once a week. That's the system. And that's stage 3 strengthen work. Building clarity so you can build breathing room. If this is feeling like a lot and you're wondering where to even start with your own money, I have a free quiz that helps you identify exactly what stage of the Secure First money method you're in. It's in the description, and once you know the stage, the path gets a lot clearer. Your credit card company is not on your team. That's just the reality. But now you know how to read their document. Now you know that the app isn't showing you everything. That's you being on your team. Now, if you want to go even deeper on how the interest math actually works, because that's where the real money is, my video on how credit card interest is calculated is linked right here. Watch that one next. Thank you so much for tuning in to Sisters for Financial Independence. I will see you in the next one. Bye.